So you can send them. GMAT, everybody. Can you hear us? Hope everything is sounding great. I am here today with our investment relations lead, Pranav here, to go over Meteora's first token holder talk. Well, I think this token holder talk will be a bit more formal and boring than our average community talk, but we really want to take this chance to go over everything of Meteora in 2025, the year with TG, the year that the community went through so much, and go into them in detail over the numbers and even talk a bit about what our plans are in 2026. Without further ado, I'll let Pranav start with the boring stuff.
Yeah, and just before I get into the boring stuff, just want to say this is going to be a part of our commitment to, institutional grade transparency. We've already worked on the token transparency filing by Blockworks, and we already put out monthly reports. And this is just going to be another thing that any token holder can refer to at the end of the day, right? So after this call, this is the first time we're doing this, so please just give us your feedback on how we can do this better, right? And we're going to do this every quarter going forward. And so quick disclaimer, nothing here constitutes financial advice. Right, let's actually just dive right deeper in here. So the three numbers that define the year here, 182 billion in total volumes facilitated across Meteora programs, right? And 1.31 billion in total fees generated on the protocol by our LPs, our partners, and Meteora combined. Lastly, 121 million in total protocol revenue captured by Meteora. These are the full year numbers across DLMM, DMM, and our DBC pools. And so important context here is Q1 was the outlier that we all are aware of due to the Trump and token launches. So the subsequent quarters, actually, you will see that they reflect a much more broader normalization across Solana DEX activity and not a Meteora-specific trend. So giving it back to Soju for a quick second here.
Yeah, I think we just want to talk about 2025 on a whole. I think 2025 was a very interesting year where we went up and down and went through a lot of amazing events at the TGE, but also struggled as a community. I think one thing that kept our team going consistently through everything is what we call the 3RP strategy, which is the idea where if we just build better technology for the community to use, and to help the community grow and educate people about LPing, and lastly to help our launchpad partners succeed. Like that, these three things are reliable, easy things to focus on that we know will not change over a long period of time. So we just want to double down and say that this 3RP strategy is very important to us as we do a lot of DRM upgrades, DBC, and really go through everything with the community.
Thank you, Soju. So now moving on to revenues, right? So this is how our fees flow through the system and end up as Meteora's revenues. So fees originate from two sources, our LP pools and the launchpads. So LP pools is like the biggest bunch of it, right? It's 1.1 billion in fees. And LP pools themselves, they break down to DLMM and DMM, with DLMM being the majority, around just under $1 billion in fees generated there. Launchpad fees are split between pre-bonding and post-bonding. So this is something that everyone's very familiar with. But you'll notice that most of the fees comes from post-bonding. So it's after graduation and dependent on the token's life cycle, how the token performs, how the token retains attention and narrative, right? And so the total fees generated on Meteora through all of these arms, 1.3 billion. And of that, 1.1 billion actually went to our LPs and launchpad partners, of which 121 million was retained as revenues by the protocol. So this essentially means that we had a take rate of around 9.2% of the total fees, which was around 21 bips higher than the previous year. So a bit more granularity into revenues. You'll see here that we have the two distinct engines, right? Liquidity pools and the launchpads. So on average, in the last 6 months, our liquidity pools actually generated around 3.1 million in revenues, and our launchpads did 4.7 million per month in revenues. The reason why we're looking at the last 6 months is the first 6 months of the year is basically super chaotic with very spiky revenues. A lot of interesting launches happened. The launchpad ICM also meta also kicked off. So that kind of is an outlier. And the last 6 months, so essentially July to December, is way more exemplary of what we would expect for revenues. As I mentioned, Believe essentially dominated the launchpad scene. So that's what you see April onwards. And then we will see Bags dominate this Jan, but that's for this year. Now, let's actually talk about what actually hit the treasury, right? So the important distinction here is that not all revenues that we generate ends up as cash flows for us, because we collect our cash flows or our fees in code tokens and base tokens. And these long tail assets, between the fee collection time and when we liquidate, prices can fluctuate greatly. This results in a distinction between the revenues generated and the actual cash flows that hit our treasuries. In this case, our cash flows, actual cash flows, realized cash flows, is 72.5 million for the whole year of 2025. Expenditures, on the other hand, totaled around 40.6, broken down into operational expenditures. So this is basically team, infrastructure, auditors, any other like rent, things like that. Things to just basically keep the light on. So that's around 18.6 million. On the other hand, we did like capital expenditures, which are basically one-off events. So anything like Met Derby, anything like this would sit here. And lastly, 19.4 million in Met-related financial expenditures. So this would relate to buybacks that we did, providing that seed liquidity to market makers, things like that. So in total, our net income for the protocol is 31.9 million. And then we also have to take into account the impact of like Solana sitting on our treasury. In this case, we actually kind of did pretty well, swapping out of Solana into USDC at opportune moments. So we actually increased our actual change in cash flows for the year from 31.9 million to 34.3 million. Yeah, I'm going to stop here and see if Soju has anything quick to say here.
Yeah, I think you can clearly see that like, as a protocol where we spend most of our time making money on chain, most of our expenses come from running the protocol, like salaries, R&D. Meteora's like very high technological age among our peers comes from like us investing in the team, engineers building out amazing technology. And since that we TG in Q4 in 2025, we spent a lot of money in Q4 trying to like push towards a token, like liquidity, buybacks, market maker, all of this cost money, and we have grouped them together under financial expenses. So you take the entire bucket as like MET token expenses.
Yeah. So next, we actually want to jump into our ecosystem. So there are multiple different like arms to this. Let's just start out with LP Army, and I think everyone over here is super familiar with the LP Army. So, but just to give anyone else who's new tuning in a quick rundown. So Meteor's mode actually isn't just like technology. Well, it began as technology, but that eventually evolved into a user mode. So the LP Army is one of the largest organized communities of active liquidity providers in DeFi. So around 2,000 active LPs deploying capital daily right now. Around 18,500 graduates from the LP Academy course. So this is something that we've been pushing quite a lot recently, because we want to be able to educate new users and old and existing users how to use the LP toolset that we've created for you to the fullest extent, right? And the target here is actually scale to 20,000 active LPs deploying capital daily. So at the end of the day, the LP Army is just network effects, but pushed to the limit, right? So more skilled LPs means deeper liquidity, better execution, therefore more volumes, and therefore more fees, all to attract more LPs. So that's the flywheel here. Next, I would like to speak about the launchpads. So these are our dear partners that essentially joined the Meteora family just in April last year, right? So every token launch that happens through these launchpads is a Meteora liquidity event. So through all of this, 118 million in fees have been generated for our partners and our launchpads. And around 5,000 tokens graduate actually from DBZ pools to our DAM V2 pools. At the end of the day, at all-time high, all these tokens resulted in 278 million in market caps aggregated through all these tokens. So when I talk about launchpads, who am I talking about? I'm talking about like Bags, Star.Fund, America.Fund, Fair Club, and all these Meta, all these are partners that use our tech to drive their individual niches, right? And this is basically a new revenue line item that didn't exist before, even in the first quarter of like 2025, and still contributed around 147 million in partner fees across Q2 to Q4.
Yeah, I think a lot of people like to meme about Meteora being the launchpad or launchpads, but like I think first we really are a platform which lets launchpads launch easily thanks to Meteora's technology. And one thing we're really proud of is that we're proud of being a very strong support to all of these partners, with them every day, solving the technological needs of working with them to grow. And is this close cooperation that gives us such a strong advantage in the launchpad space. And on the other hand, we're also probably the first DeFi app ever to actually build a widespread retail LP army. And I think it's a combination of our technology and really the community members who show up every day and make the LP army what it is. One thing that we are very proud of is that a lot of the LP army efforts are completely homegrown. Like the boot camp is done completely by community members. And I always tell my team that like the community knows how to use our product better than us. So we need to first get our shit together and use our product more and be able to contribute back to the LP army. And two, he worked very closely with the LP Army, because ultimately they are the ones that use the product every day. And it brings me great joy to be able to work with the Launchpads and the LP Army every day.
Perfect. Moving on to native and cross-chain token launches. So Meteora is becoming like the go-to destination for liquidity beyond just Solana native tokens. You see cross-chain tokens like Monad, Hyperliquid, and Pudgy Penguins through our partner Sunrise DeFi coming to Solana for the liquidity. And eventually, Meteora still ends up being the home for these projects. Obviously, our close competitors are also hosting liquidity, but we end up being the place for liquidity to aggregate by far, right? So across all of these types of launches, around 18.7 billion in volumes across like project tokens, not just meme tokens, not just like ICM tokens, but project tokens. And this validates the positioning. So if you're launching or bridging a token to Solana, Meteora is where the liquidity is.
Shout out to Vesper who created this vibe-coded UI to show you where all the liquidity is on Solana for each coin. It's very nice.
She vibe-coded this like today morning. It's insane. So, and actually now passing the time back to Soju quickly about the 3LP strategy.
Yeah, I briefly mentioned on the 3LP strategy at the start, but I think one very important thing to me is the fact that we have all three. We are known on Solana to have the best liquidity pools technology with our dynamic fees, our dynamic conf fees, our code token fees, and all of this. We're also known to have the widespread retail liquidity LP army, which helps us ensure that there are people who show up to use our technology every day and really give us a tight feedback loop to help us improve our product. And lastly, we have the Launchpads. We push forward the industry with our partners, creating new assets, new meme coins, new things to trade and LP on Solana. The most important thing to me is that we have all three and we leverage all of them together to deliver outsized returns for everyone. Because ultimately, that's the goal here. So I think this is the question that most of us will ask. So far in this call, we've covered 2025. What's happened so far in 2025? But let's start to take this opportunity to talk a bit on what's in the future or what's in 2026. So in 2026, our goal is to make everybody in crypto a member of the LP army and to use Meteora's tech. No, it's so all good, sorry. Yeah, our goal in 2026 is to make sure everybody in crypto uses Meteora's tech. The way we look at it is that everybody in crypto is a trader. We like to buy and sell assets that we believe in, or Bitcoin or whatever assets. However, there's a significant group of people, 80% of them, who see themselves as a trader but not a liquidity provider. In 2026, our goal is to onboard all the traders to liquidity providing, all the LP army on Meteora. How do we do that? We do that by telling them or convincing them that trading is just like LPing. So we started last year with a very small experiment, the pool discovery. We showed them the same way they would discover and trade tokens, and we brought that interface to liquidity providing. What does that mean? That means that if you are a trader, you open the pool discovery page and start to have an intuitive feel for what tokens you can LP without having any understanding of LPing in the first place. We launched this at MedW last year, our large-scale community event, and the community absolutely loved it. We validated our thesis that this is something that's worth pursuing. So we pursued it, and we released the dynamic terminal last week. What's a dynamic terminal? The dynamic terminal is an interface that's very familiar to traders, but brought in the context of LPing. You see the price chart where you are used to seeing it, but on the side panel, instead of buying and selling, it's LPing. And all the statistics that are shown are the same statistics that you will usually use in LPing. What does this mean? This means that if you are a pro meme coin trader or coming from a centralized exchange, you come to Meteora's UI and you intuitively already know where everything is because that's where it will normally be on a trading platform. We're trying to break this idea where there is an LPing interface and a trading interface. To us, it should just be one interface. And we have early signs. There's been many people who are known to be reputable traders in the space who's been using Meteora to manage their meme coin positions. And this is a good sign that what we're doing is working, and we're very happy to keep doubling down on it. So what's next? What's next is to use Meteora's liquidity pool technology to give you even more powerful tools that you can use for trading. We have limit orders coming to Meteora very, very soon. And we are introducing more advanced orders such as the market limit order. So for example, setting a normal limit order would be to bust buy sold at $100 or at $80. A market limit order allows you to set an order that is a market order but becomes a limit order. For example, sold price is at $80 now, and you want to buy sold as long as it's below 90. You can set a market limit order for sold, and you just keep buying sold until it hits the point where it should stop, which is $90, and then it stops. These kinds of advanced trading tools are very familiar to pro and institutional traders in TradFi or in the traditional finance space, but they're not used to us in crypto simply because no one has built it. We're going to double down on bringing these advanced order types to life on the Meteora interface, which will allow you to both trade and LP seamlessly and give you an edge in trading. Because fundamentally, in what we believe in 2026 is that this is just one thing. And one thing I didn't mention is that this will introduce a new revenue stream for Meteora, trading revenue. The revenue we earn from these tools are entirely on-chain and not a UI fee, because when you interact with our program, which has this feature, the fee is built in. And you introduce a new stream for Meteora as other partners integrate our advanced order types to bring to their interfaces as well. With Dynamic Terminal, we target a whole new audience. We need to break out of our LP army bubble and approach and sort of onboard everyone in crypto to use Meteora and the Dynamic Terminal. So how do we do that? We're going to need to break out of a bubble. So that means we have to do some crazy things. And we thought about it more, and we realized that we needed a way to tie in the MET token. One thing that's very important to our team is that because we actually have a product that's amazing and good, any MET token utility should tie itself to the usage of the product, which is our advantage, to create a flywheel where the product does well, the token will do well, and vice versa. So, introducing the MET Trader flywheel. We are trying to onboard traders and masse onto Meteora, and this is the way we do so. Traders coming to Meteora for the first time and are dazzled by the experience will be to offer a new referral program. This referral program is only available to those who stake, and your stake amount will determine your referral earnings. So the traders will onboard the Meteora, buy MET token, stake them, and be able to refer more people to use Meteora. We expect them to reinvest most of the earnings to staking more MET, which will allow them to earn more referral, or to LP and make even more money on Meteora. They will also bring more traders into Meteora for the first time while they're doing so. This achieves our core purpose, which ties the utility of the token with the usage or growth of the platform. And we're happy to announce that this will be the first token utility experiment that will be arriving in the early quarter 2 2026. The current roadmap for the team is to finish out the dynamic terminal improvements, which many people are requesting for, move into code token fees and limit order, and then move into the referral program and utility to sort of supercharge our growth efforts and allow us to break out of the Alpine bubble and onboard every trader on Solana. But that's not all. We also have Bedrock, which is the first of our Meteora Labs projects. We announced Meteora Labs in December 2025 at McDerby. Our goal to have 5 new companies under Meteora taking wild bets and changing the world. Bedrock is our first of many. The idea of Bedrock is to offer a framework which allows founders to tokenize their equity. We see a trend today where many people want their equity to be owned by the token or vice versa. When you buy someone's token, what you are really interested in is to buy the company's equity. So Bedrock Foundation will tackle this by making tokens great again and people trade them. The Bedrock platform will launch end quarter 1 2026, which means we have about 2 weeks to do so. Either end quarter 1 or maybe the first few weeks of quarter 2 2026. We'll be rolling out very slowly in the way that gives us the maximum chance of success. So what does that mean? When Bedrock officially launches, you'll be able to KYC and launch a coin on any platform, and you'll be able to see multiple coins that are already on the Bedrock framework. What we want to emphasize is that Bedrock coins are completely permissionless and anyone can do it, which means that any Bedrock launch is not an endorsement by the Meteora team. And we'll be happy to share more details in the weeks to come as we build up for the main launch. Well, with that, we have reached the Q&A section. I think there's been a lot of questions by the community, and we would love to answer all of them. Please leave them on the comments on the Twitter or YouTube stream, wherever they're dialing in. If you are an investment fund, you're also welcome to message it directly to us, and we will reply and keep your identity private, but we will answer the question. You can also message us on Discord. We are sort of observing everything.
I think.
Yeah, we'll give it a while to go through it. While we're waiting for that, we'll go back to the previous sites with all the numbers. I think the cash flow number was one of the more interesting ones. Yeah.
No questions.
Yeah.
Questions here.
No. Questions. No questions? Any questions on the liquid in this call? Okay. Question from one of our liquid fund partners. I think a lot of people are interested to know our Q4 higher than our other quarters. So let me just pull up our statement for now. Our more detailed statement for now. Okay, so we announced the Meteora IR relations page, thanks to Pranav, ir.meteora.ag. And one question that has come up multiple times is why the expenses have increased so much over the past 3 quarters. So I would like to just break down briefly how we spend money. So we spend money mainly for R&D, audits, infra. Our audits, infra, and R&D is quite high compared to average teams, and that's because we keep shipping. If we stop shipping, R&D and audits will drop to 0. But what's been more of a problem for us in the last few quarters is actually legal expenses. And why I'm bringing this up right now is that because I'm happy to say that we are expecting the legal expenses to come under control. I hope so. And my outlook for quarter 1 and quarter 2 in 2026 is that expenses will drop. And our operating expenses or real R&D expenses and stuff is not so high. So it's something that I think will be very controlled soon. But we see. Okay, so there's some questions by Shub. Will Bedrot have its own token in the future, and revenue from Bedrot will go into Meteora treasury? That's a very good question. So one thing that's very important to me under the Meteora Labs experiment, Meteora Labs teams will all not have its own token or its own equity. All of it will flow towards Meteora. Bedrot Foundation right now is more of a public group to achieve a sort of fixed token which will benefit Meteora. We will most likely be supporting Meteora's coins, which drives Meteora's revenues directly to our protocol fee. But if Bedrot itself make money, we'll distribute those revenues 50-50 with our joint venture partner. Bedrot will not have its own token, will not have its own equity. My plan is to have 5 full experiments this year, which doesn't have its own token or equity. It all accrues value to Meteora and the MET token.
So we have another question. What makes the difference between revenue and cash flows? So sure, I think it's something that's difficult for people to understand as well. So revenue is simply, as you understand, Meteora is an AMM. Right? So whenever a trade hits a Meteora pool, our trading fee is incurred. Right? A portion of that is given to a liquidity provider, right? And this is usually in either token or the base token. Most times it's actually in both tokens as the pool is in range, as price moves through it, right? So usually what happens is when we collect the fees, that's the point at which revenue is booked. So for example, we collect token A and USDC. Obviously, the price for USDC is always pegged to 1, but token A's price can maybe $5, right? But by the time we liquidate, maybe in a week's time, especially in 2025, there was quite a big difference between earning the fees and liquidation when this allows the price, for example, $5 to $3, which means that the actual cash flows when we liquidate it from token into USDC or SOL will differ from the revenue booked. So this is why our revenues, even though we stated as 121, the actual treasury assets, usually cash, usually USDC or SOL, that hit our treasury is much lower. So we essentially call it internally as we've lost around 48 million to shitcoins.
The shit right now. Yeah.
Yeah. So to solve this, we implemented a update that essentially makes fees whenever there's incurred at least a threshold of fees. For now, it's at $100 or $1,000, depending on different rules. Whenever the pool has incurred that amount of protocol fees, it will automatically convert to USDC or SOL and transfer to our treasury. So we've also, this essentially decreases the time difference between revenue and the treasury earning that as cash flow. So to track this in greater clarity, you can actually go to Blockworks. There is a fee collected graph that essentially tracks the track cash inflows alongside revenues. You can always see is there difference. We assume that in 2026, because we have this program in place, that difference will.
Yeah, I think one thing to know is that all of the revenues that were not in cash flow were from coins that did very well, pumped very high, and then died before we claim it. And I think that will be much less so going forward because a lot of Meteor's technology actually supports token fees, which means our protocol fees actually denominated in USDC or SOL. So I think the variance between revenues and cash flow will be a lot lower than Pranav has said. But it's important to know that while everyone says we made $121 million in 2025, the money that actually hit our wallets is 70 million. Yeah. I think another question that we have is that it's more about our general operating expenses. So to cover our infra team expenses, and just basic operation expenses, we spend about I think $1 million a month, which is much lower than the operation numbers we posted last year. So right now, due to the bear market, we cut down on our growth efforts a little bit, and I think our burn rate has dropped by about 50% of what it was, without counting the legal expenses. Yeah. As for other experiments, another one of our partners asked us about utility. I think everyone wants to know about utility. First, I think we utility in a way that is very strategically aligned with our goals. So for example, because we need to ship the dynamic terminal and get everyone to use it, sort of to expand this circle drastically, it made a lot of sense to invest time in the utility staking product that powers referrals, which will give us a flywheel. In this current market, our main focus is to create new revenue streams and create new opportunities so that we can double down on them with met utilities similar to what we're doing here. This is just the first of many experiments. While we don't have a clear set of experiments that we'll do next, I know that we'll keep doing them. So Nicholas in the chat also wanted to elaborate again about the experiments. So let me just elaborate one more time and bring out the flywheel. So you are a trader. You're using Meteor for the first time. As a trader, nothing attracts you more than volume, fees, and activity on the coins. So you will want that to happen. And if that happens on the MET token, you'll need more traders. So as a new trader, you're using Meteor. Love it. So you want to refer our friends. To be able to refer our friends and earn referral fees, you have to start staking because we want referrals to be permissionless, but for people who care about the Meteor protocol and the token. So we make it dated money. The more you stake, the more you can earn every month with referrals. So we expect top referrals to own a lot of the supply and stake them. And because this is a flywheel, more traders coming in to stake to refer will bring in more traders that will increase our revenues. And also most of the people who earn referrals reinvesting on staking so they can earn more the following month, or they'll be outpaying with it. So we see a very powerful dual-pronged flywheel here. It will really be effective if we can nail the user experience alongside the powerful trading tools on Meteor. It's extremely important to us where the utility of the token ties into the growth of the platform because that's our advantage. Meteora's first advantage is we actually have a product that's doing very well, and we want to make sure it keeps doing well. Okay. So Content King is asking, is it Alpine already getting saturated? So that's the beauty of the dynamic terminal. Our goal isn't just to get more people to LP. Our goal is to get more traders and more LPers to trade and interact with these tokens. So what we expect to see is that as Meteora successfully pushes the dynamic terminal, we'll have more people interacting with coins, not just providing. And I think that with the dynamic terminal, it reduce copy traders. A lot of copy traders want to make money from LP, but don't know how to LP. The goal of dynamic terminal is to make it very intuitive for them to put up a position that represents the outlook of the token price, and that may earn fees or may not earn fees. What I hope to see is a decrease of percentage of people LP and more people just in using Meteora. Yeah, I think a lot of things we are seeing for the first time. For example, we didn't mention when the Bedrock launch was happening. Where we are on Bedrock right now, in case you are wondering, is that we are onboarding at least 2 launch pads and at least 3 CAs to the Bedrock platform. What this means is that we want to make it clear that onboarding is the launch pads permissionless, and to make it clear that there's people CAs coming to Bedrock. So when officially launches, you'll be able to incorporate a Bedrock coin permissionlessly on your own via any of our launchpad partners. And it's very clear there's a permissionless framework. Okay, we're going to give it maybe 5 more minutes for questions. And if anyone has any questions, feel free to just message us directly or to message in the chat. We were staking, and I missed this question. We were staking MET increased fee generated on LP. As I mentioned, our goal is to have the staking of MET tokens be tied to the usage or growth of the platform. So we hope that as more people stake, more people will get referred, and the flywheel will spin of Meteora gaining more users and more revenue. Does anyone have any questions over our numbers in 2025? We have a lot of detailed numbers in 2025. This report was also the first time we released our detailed expenditure and treasury position, and it was not easy for him to look through all the numbers, because there's a lot of them. Okay. Another one of our partners is asking about what is the progress on token and equity via Bedrock. It is somewhat regulatory compliant or gray zone regulatory arbitrage. So the Bedrock framework is less about arbitrage or clarity, and it's more of ownership by proxy. We are launching a coin on Bedrock or Meteora. What you want is a decentralized global community of investors. While we can't support that and we sort of wait for things to happen in the US regulation, Bedrock provides a simple solution. The Bedrock Foundation, which is the team partially owned by Meteora and our partners at Govern, will act as a shareholder on behalf of the token holders. We will try our best to act in the interest of the token holders and have designed many clauses and mechanisms that we think which we think can work in scale, and we'll make it very clear what we can cover, what we cannot cover. In the event of an acquisition or a takeover, we can also be the ones that distribute the funds back to the holders via airdrops and mechanisms that we are very familiar with on-chain. What this means is that in the future, as the regulatory environment becomes clear, we are able to be fluid. If we want to transition to a new framework, we as shareholders of the entity can work with the partner to transition to a new and better framework, such as maybe a tokenized equity standard post-US Clarity Act. We are currently onboarding maybe 6 to 7 teams to Bedrock, incorporating entities for them and displaying them. But the goal is to be fully permissionless and non-opinionated on who we are onboarding, which means that when you're trading these coins, you should still be doing DD yourself on whether you believe this founder will make it and not rely on our framework as whether the founder is malicious or not. You should rely on our framework to make sure that your rights are protected on your behalf. After the main official launch, you'll be completely permissionless to launch on Bedrock. You'll be able to launch the token, KYC, and everything will be done automatically.
So if there are any founders watching this, please do reach out to Soju and ask about Bedrock. We'd love to jump on a call with you guys and run you through how Bedrock could probably fit your situation.
Yeah. If you are from the founder's perspective, think of it this way. My team and I will be on your cap table helping you win on behalf of the token holders. While we have to do this on scale across everybody, we also think that there'll be a very big power law in action, like venture investing, where one team out of 20 or 100 will do well. Our job is to replicate. Our job with Bedrock is to replicate venture style like economics, where you invest in 100 teams, maybe one makes it and 99 that don't make it on chain. Our job is to make sure that when one makes it, you get something and you're not screwed over as well, which is sometimes the case, unfortunately.
Yeah, specifically, it's the exit of these investments. Right? Obviously, if an investment goes down, who cares, right? You've lost your money. But when it actually does well, but then because of like some obscure equity structure, the token holders are left holding basically nothing, while the equity holders essentially are able to take advantage of the capital raised from these token holders, right? That's the situation that we want to avoid. And I think Bedrock is probably the best suited to protect token holders while still giving founders ample room to execute like traditional founders in the space.
Yeah, so another ask, in order to refer, you must be staking X amount of MET and we are awarded for referrals. That's the idea. While we will announce it in detail when it's logged in, but that's the idea we're going towards. Because we know that the trading community and trading products largely rely on referrals or growth, so we are bringing that mindset to Meteora. Well, that's it. I think if you're new to Meteora today, go to meteora.ag and chart the dynamic terminal for yourself. You just need to be a trader. You just need to think whether the coin will go up and go down or go down and deploy positions accordingly. If you have any feedback, we'll be in the Discord as well. We are also very near the end of Q1 2026. So we're going to release our quarterly report maybe early next month, right after the quarter ends. Okay, final call for questions. If not, we'll stop it here. We are very active on Discord and Twitter, so if you can try to contact us there if you have any more questions. 3, 2, 1. Okay, so thanks a lot for coming to our first tech talk. I mean, our first token holder call. In this call, we went over 2025 completely. How do you feel about this call, Pranav?
I think it went well. I think we were able to lay a lot of the groundwork of what we want to achieve during these calls, what kind of information we want to tell people. So on the next quarterly call, you know exactly what to expect. Results of experiments conducted and the roadmap for future experiments. And at the end of the day, I think we want you guys, our token holders, to essentially understand that there's a very capable team driving the Meteora ecosystem, the protocol, the tool set, and the community. And it's basically to trust in us in executing on the vision that we've laid out, even just like a year ago. Yeah,
I think stay involved in Meteora's journey. You get how we onboard many traders to use Meteora for the first time so that we grow 100x. You get how the Meteora Labs experiments go and you get how they perform. Because ultimately, those are the ones that will generate outsized returns for Meteora. And also you get how our new trading products resonate and do well with the larger crypto community. If you have any ideas, feedback, or just want to talk, find us on Twitter, Discord, anywhere.
Well,
that's it. Great. Thanks for your time, everybody, and we'll see you next time.